This is Elliott Wave Cafe for YouTube, where every 2 weeks we take a look at Bitcoin and Ethereum through the eyes of the wave principle, using Elliott Wave analysis to make sense of market movements, directions, and sentiment. This is your host, the Cowboy, everyone. Let's get started. All right, so Bitcoin, it is in a period of consolidation. I think, the larger wave count, as you can see here, it's named my white count. It's still pretty much valid, and it shows us that we have completed a wave 1 cycle back in 2018 with the wave 2, and we've had a pretty nice rise here in this wave 1. Now, the point is, are we done in the second wave at this low, or we're still working a second wave? So my chart really didn't differ a lot from kind of what happened a couple of weeks ago since our last video happened. And it remains, under the same, the same thought process. This wave 2 can continue to develop. And the way it would is by this being a flat scenario where this is a 3-wave decline. You go up in 3 waves and then you sell sharply here in a 5-wave manner. And then, you find some sort of a low, either, somewhere near these levels or, below those levels back to this trend line, somewhere, let's say, in the 30 to 35,000 neighborhood, and then you rally from there. So I remain very constructive longer term. It does appear that we are in a period of consolidation. Not a whole lot has happened since we've basically made these highs. We basically just retested them a little bit, and then we got rejected and sold off, which means that, people are, kind of a little bit afraid to buy, as you're making new all-time highs. And the market is not rewarding, that type of behavior. So maybe we just need to consolidate a little bit more. I mean, this rise was extremely aggressive. I'll take a look a little bit here at the time fibs, and you'll see that we've spent, not a lot of time correcting after this huge advance. So, so far the price is pretty much sideways. So I know it's frustrating. It's, we would all kind of want to see moves one way or the other and just kind of either trend downwards or trend upwards and just have more of a larger volatility and something to kind of, enjoy when you see price movement. When, we're getting a contraction, it's not very, very rewarding. But from this type of behavior, new trends are formed. So that's kind of what I'm looking for here. But overall, the larger trend, I think, still remains pretty much constructive and looking higher. It's just a matter of, how soon we kind of finish this kind of sideways corrective pattern. So here's the next slide where I said I was going to talk a little bit of time fibs. I don't talk about them a lot because, in the scale of priorities for me in terms of Elliott wave, this kind of falls towards the back. It's very important, the count structure is very important, the right look, the personality of the waves. These things overtake, let's say, time, a relationship between waves, in my view. So I do pay attention to them every once in a while, especially when I notice that there start to be, important time zones, and I start to kind of pay attention. So one of the videos that I made on YouTube back a couple of years ago, 2 years ago, the first one where I looked at trading view, by analyzing that kind of time fib tool that they have on there was back in here. And I looked at this trend and this impulse from these lows to these highs, and I projected it outwards. And, exactly when I was making this video, we were somewhere in the sell-off. And then I was talking about the 618 level on there. And exactly, not long after, we've gotten this kind of massive rally exactly from 618 distance traveled, compared with this impulse in here that took about 193 days. So here we are, a few years later, right? And I'm measuring again a move from these lows, during the COVID crisis, and then all the way to the rally to $60,000 in here. And this took about 397 days. And, take it or leave it. I might not be extremely precise, but, it's a pretty strong impulse. So I'm measuring the distance travel in here, and then I'm projecting it outwards into the future, and I'm using, you know, some very common fibs for, you know, to kind of give us some timelines of where price is traveling. So you can notice here at about 23%, you know, in time compared with the time spent previously, you've had, you know, you found a pretty nice low and you started to rally upwards. And now we are at the 618 level, something very similar with what we've had back in here at the 618. So it's quite possible that, you know, right into these levels, you know, not long ahead, let's say maybe in the next few days or something, we might get a pretty sharp rally upwards here, and I'll show you on the count. You know, that could be a wave B, or it could be the beginning of a larger third wave, but some type of impulse, you know, it might start to happen here at the 618. So, you know, will it be to the upside? Will it be to the downside? You know, it's you know, it's kind of a 50-50, but in terms of the pullback here and some of the counts that we have, I think it's probably going to be a little bit higher. Now, equality between this, you know, this move in here and you know, what happens from here onwards, it is 100% and comes towards the summer of 2022. So if you wanted to look for some equality, so go ahead and use these tools. They're available in TradingView as well, and you can you know, do several types of measurements. You can measure wave 4 versus wave 2. You can measure wave 2 versus wave 1. And go ahead and check that video. I'll link it up here, you know, in the description, or, you know, it's going to pop up on the screen here, just to kind of, you know, so you can go back and take a look at that. Probably already a lot of you that are seeing my videos have checked that video out, where it's a very simple explanation of how to use those tools, because sometimes you need 2 points of contact when you're measuring between wave 1 and, when you're measuring wave 2 compared with wave 1, but you need 3 points of contact when you're measuring wave 4 compared with the wave 2. So it's a little bit different on there. So here is the other count that I have under my red count on a longer term basis, where I'm looking at this kind of larger consolidation here as part of a fourth wave, as a running triangle that found a wave B top on the new all-time highs, and since we're selling off since then, I'm looking at this decline as a possible, you know, wave A of C, which means that rally is supposed to come here fairly shortly in a B wave, followed by a sell-off in the wave C. Then you're going to do D and E. And here is the time fibs compared with the second. I talked about this a couple of weeks ago as well, where you're actually measuring the distance. And 1618 equality comes pretty soon in here. So if this move kind of wants to get finished, then you're going to get, let's say, A, B, C, D, and a very small E wave in here, and you're ready to rally upwards. This could happen near 100% equality, but I doubt, because in terms of a right look, that would not look too well. So I'm going to continue to kind of keep an eye on this one as the market is consolidating. It's in a kind of a distribution phase. It's just, you know, you'll see some on-chain analysis a little bit later that I'm going to take a look at, where you see that the market is basically in a very a middle ground scenario, where there is a big fight between bulls and bears. We are at some important levels in here that are supposed to hold for the bulls. If we're going to break below those, bears are going to take control, and I think we're somewhere in the middle right there. So the next one in here, I'm going to jump over and take a look at some moving averages. And, you know, you're very familiar by now. This is the 1 week chart, the one that you see on the right side here. We're threatening to break below this 50-week moving average, which is an important indicator longer term. The market is trying to fight it. You're sold off below it. You're kind of starting to climb above 47,000. So, you know, again, it's just kind of middle ground in the price, where, you know, bulls or bears are fighting it out, because the moment you lose this, you know, you could possibly get into a little bit more of a bearish stance, where you can spend, let's say, several months kind of continuing to correct, maybe towards 30,000 to 25,000. The 200-week moving average is far below at about 18,000. Unless you're going to get a major flush down, I don't think this is going to get tested. This should continue to kind of advance, to kind of move sideways with the price, but it's pretty far below even the realized cap of Bitcoin, which we'll take a look a little bit in a second here. Now, what you see here, this is the daily charts. We are breaking slightly below the 200-day moving average. We're starting to climb back above it. and it's also combined with something that, you know, I'm starting to introduce a little bit more. I'm noticing that the 350-day, it's an important aspect. I've been reading about it and kind of familiarizing myself with it, since Bitcoin trades, obviously, you know, every single day of the year. So this is a 350-day moving average that tends to support prices longer term, and it's being tested right now, and it's at the same level as the 200 days at the moment. So you know, definitely very, very important level in here. We're starting to kind of crack it. You know, in terms of bearish sentiment, you would still need to see at least a few days of a close below the 200-day to you know, to get more confidence that maybe some more bearish moves are happening and are coming lower. One of the things that I've talked to my members a little bit earlier, actually yesterday, was the fact that you could actually climb from here and you can make, let's say, a move higher, maybe towards the 50-day moving average, and then create a right shoulder. And if you look at this as a left, that's as a head, you know, you get some kind of a neckline here. You still need to move higher, right? That creates that right shoulder or a B wave, and then you're going to get a sell-off in the C wave. So that's something that's quite likely, you know, based on the fact the shorter term momentum, it is to the downside, since you're below the 50-day, below the 21-day moving average as well. You know, but I think some sort of a rally, it should come before, you know, let's say a bearish trend can reassert itself. But also remember, you know, this thing can continue to move higher based on some of the counts that I'll show you in a second. So bottom line, I think no matter how you look at it, even if you can sell a little bit lower, I still think there could be a rally here towards 50 to 52K near term, you know, before the market decides kind of what it wants to do. Since we're at the moving averages, let's take a look a little bit at this golden ratio multiplier. So this is something that, you know, I'm starting to kind of look a little bit more. You know, every single day, if not, you know, every few days, I kind of go into these sites and just try to familiarize myself a little bit what's happening with some of these, you know, this research. So look into Bitcoin. It's a site that does, you know, a lot of kind of interesting analysis, you know, regarding on-chain and, you know, regarding market cycles as well. And here is where you can find the 350-day moving average as well. And it is something that supported the price. And basically what it does here, it tells you that, you know, by multiplying the 350 day moving average with some of the fib numbers, you know, you're going to get certain levels to the upside where the market could find resistance, or where you can start to identify, you know, cycle wave tops. And here they're multiplying with the 1.6, right, which is you know, a golden number on there, and then they jump over to 2, and then you get 3 plus 2 equals 5. If you're familiar with the Fibonacci sequence, then 5 plus 3 equals 8, 8 plus 5 equals 13, 13 plus 8 equals 21, and 21 plus 13, and that's how you get, you know, the Fibonacci sequence. And then if you start dividing these numbers, you know, the lower number with the higher, or the higher with the lower, you get a variance of 0.618 or of 1.618. That's the golden ratio. So just a little bit of you know, look into kind of how the fib numbers work. So based on this, you will see this is a 350-day, and then if you look at the ratios, then you get the 1.6, which is the green line, you get the 2, which is the red, and then you get the 3, which is that purplish line on the top. And usually that, you know, apparently, you know, kind of from what I've read on the explanations, you know, this kind of purple line, you know, the 3 times multiplier should provide the next kind of cycle top in Bitcoin on the next move higher. Now you notice it kind of tagged it back in here as well, and then we kind of sold off back. So right now we're at some very, very important support levels. You know, there's a very high likelihood, you can see it zoomed in here, it's a very high likelihood that you could bounce from here and move higher. You can notice that the other multipliers, the 8, 13, and 20, the 5, 8, 13, and 21 happen in previous cycle tops. So this one in here, I think this one is the 5-time 350-day moving average back into the cycle. I think it's the 8. Back here it is the 13, and then this is 21 times the 350-day moving average. So you know, as the market matures and, on the logarithm scale, you're getting less and less of a run into price because the market cap gets bigger and bigger. So it's harder and harder for these cycles to get that long, that deep, that powerful. Obviously these multipliers get decreased, and you're starting to look, let's say, 3 times the next one, then second, and then so on and so forth. So kind of something interesting that I've been looking into, and I wanted to kind of share with you guys. So go ahead and check that site. It's pretty good. It's got a lot of good information. I'm sure a lot of you are familiar with it already. All right, the other one that I wanted to kind of quickly share with you, and I know this is an Elliott wave analysis, but I'm trying to incorporate more interesting things besides just the counts. We'll get into some shorter term counts here in a second, but basically this is another interesting metric where we're looking at coins that are 1 year or older, so more longer term hodlers into the chain and into the network, I should say. And then there is a very nice description here where you can see that obviously this blue line here is the price of Bitcoin, and then this is kind of what happens with these older coins when price does certain moves. And you can see that as the market moves into a higher trend, people that have been holding for longer than a year are starting to take profits and sell into this uptrend as their coins become more and more profitable as the trend moves higher. If you've been holding for a longer time, you have a tendency to start selling and taking profits. And then once you find a market top, then people usually stop selling, and their incentives to sell started to get diminished. Then they start to accumulate a little bit more, stop selling, and then as the market gets into a period of let's say distribution, more of a bearish market, more of a bearish trend, these people start to accumulate, those coins start to move into longer term storage, and you're getting an increase into this metric in here. So you can notice as well that back in here was a period of consolidation as well, where market did not do much. As we're getting ready to make new all-time highs above 10,000, then longer-term holders are starting to sell. Market moves higher towards $60,000. More and more selling occurs, but we've never reached the level of selling and profit taking that we have reached in previous cycles, which was towards between 40 and 50%. So we're still fairly high on this. I think we're at about 55. I don't have the exact number on here. And what this suggests is that, and you can see that, people starting to, they actually stop selling, which means that they're not actually putting a supply into the market, right? The supply gets tighter, and that should, should stimulate the growth, of the price in the future, to continue to incentivize these older coins to be sold into. So, what that means is that as this price starts to move higher in here, people are going to sell lower, right, as the price moves, and then we're probably going to reach levels again towards 40 to 45%, at which moment, you can tell that maybe a longer term cycle has been reached, and then we're going to get a larger pullback in here. So we could be, somewhere, in mid-cycle. You see something similarly happened, back in here as well, where, you kind of started to, there was like this period right in here as people as price was consolidating, people kind of stopped selling, and then the price moved higher, and then you made one more low, and it's possible that we're going to get something similar here as well. Now, if this continues to move higher, right, that means that the price will start to drop or move sideways. So it's an interesting metric to kind of watch. Go ahead and study it on your own. You're probably familiar with it already, but it's definitely something that it's worth looking into. So the next one in here, it's just a kind of a simple look at the realized price of Bitcoin versus the market price at the moment. Realized price is approximately 24,000 right now. On the left hand side in here, you see a realized market cap. It's at about 460 billion or so. This is more of a kind of the true market cap of Bitcoin, and then you have the larger cap, which it's the total number of coins versus, the price of Bitcoin at a certain time, and that gives you the total market cap. But if you look at the realized cap here below here, it says that considers the price at which coin, when each coin is last moved, making it a powerful metric for estimating the true economic weight or the global wealth stored in the asset. So it will discount this kind of long dormant coins that are lost, that are considered to be of low economic value. So at the moment, this price is at about 24,000. This shows you that the market is in a consolidation phase. Every time this kind of starts to trend, you're in a growth of the network. When you're moving kind of sideways, you're basically, somewhere mid-cycle where you're just continuing to accumulate and consolidate and distribute. So every time, the price comes and approaches, this line, you're getting very good opportunities longer term. So we're still, a little bit far from there. If it really wants to kind of tag it, there's places where people are probably going to load the boat and look for the new move higher towards, who knows, 100K and above. So, just something to kind of definitely watch, kind of where we are in relationships with some of these realized caps and realized price. All right, going and jumping over into taking a look at the counts. This is something that we've looked at, a couple of weeks ago. So that's December 4th. Switching the count to an impulse here in a 1, 2, 3, 4, and 5 for a wave 1. Pullback here in a wave 2. This still remains pretty much valid. The 618 level wasn't really taken out just yet. We're still consolidating next to it, but we really haven't made new lows below this 39.6. So in terms of a, higher high and higher low kind of perspective, we're still, let's say in an uptrend in there. And here is, the look 2 weeks later. You've risen from these lows. You went up, kind of tagged 50,000. You can make a wave 1 out of there in a little bit of an impulse. The move from those highs to these lows continues to look very choppy, overlapping, kind of corrective. Could be qualified as a second wave at a lower degree. 1, 2, and let's see if we can squeeze higher in this larger third wave. Again, this could be a B wave per the triangle count. It seems a good leveling here. This is a 618 as well of this rise into this wave 1. So, last night you've gotten a little bit of a bearish push again, but it was quickly rejected. This could be a sign that the market actually is pretty strong. You've got a 200-day moving average in there. You got a 350-day. You've got some of these other indicators. Some of the addresses are starting to increase versus decreasing. So there's a little bit of divergence between kind of what happens on price and what happens on chain. So, we have been completely deleveraged on this kind of sell-off from these highs to this low. So a lot of those, indicators that look at all these derivatives, options and futures and open interest and things like that, are basically telling you that, a lot of that excitement was flushed out of the market and we're more towards a true value in here. So, something to definitely watch. And, some of our members are actually positioned to the long side. I'm still waiting a little bit. I took a little bit of a long trade. I got stopped out really. It wasn't the best entry in here, but I might reinitiate a long position, with a little bit more confirmation. So definitely watch this. I think 47, 48, 49, if it gets taken out, then you can move towards 50 to 52, maybe even 50K. This 59,000 is very important. If we're able to kind of climb back above this, that kind of B-wave idea would kind of start to get diminished, and you're probably going to look at more of an impulse and the next leg higher. Here is the idea on the triangle where this wave A could be completed or near completion, maybe to a truncated fifth wave, some kind of an ending diagonal in here. Still a rally up in B, then a move down in C, and this continues sideways, right? Similarly with what we kind of saw on the indicators before, where you're actually continuing to accumulate maybe into the spring of next year before the next move higher starts in Bitcoin. This 35K level, this 30K, it's a massive base. So, if you start to break below these levels, then we have, some bigger things to worry about, and we're going to have to start to look at those, that realized price, and, then those next levels come towards 24 to 25,000, but it's still very, very premature to discuss those levels. So, just really, really quickly, a lot of people are starting to talk. I've been, discussing this correlations between the Bitcoin and the S&P 500 and equity markets for a long time. If you've been watching my videos, more and more Bitcoin becomes as a regular asset, as a macro asset, right, into the world of finance. It should be decoupled. I think, in my view, I think it should be kind of on its own, world out there, and not have to do much with the rest of the assets, because the moment you get correlations, things will start to eventually get boring, and it's not going to give you such a better let's say, diversifier, right? Where you're trying to put your money into something that's not correlated with the rest of the market. So you want to, gain different percentages and generate, let's say, more alpha. But, listen, it's something that's happening. Definitely. It's, this have been correlated at least since March lows, since Bitcoin continue its growth and the market cap getting near $1 trillion. It's hard to kind of be ignored, even though it's still kind of small. The bigger it goes, the bigger it's, the harder it's going to be to be ignored, by the larger macro community. So, here we are in a big divergence, where the S&P 500, sold off a little bit a few weeks back, in line with Bitcoin. Then, we started to rally again. Bitcoin continued to make lows in here, and the S&P 500 still remains fairly elevated. What's going to happen next, it's kind of hard to tell. You notice a lot of talk about, the Fed shifting from a easing monetary policy, for the past few years, to a tightening monetary policy, where they talk about reducing their asset purchases. They're talking about raising interest rates, and it's due to this correlation, with the rest of the market. It's fair to assume that by withdrawing liquidity from the market, this will impact the price of Bitcoin being correlated with the equities in general. Now, this remains to be seen if that's the case. We'll see kind of how the markets react. The S&P 500 has been selling off. It still remains in a pretty strong bullish uptrend in here. I've showed, some interesting charts to my members, I think last week, where we're basically watching what happens to interest rate cycles, where you have, a tightening cycle, so when the rates are going higher, what happens to the equities in general. And usually, the markets don't sell off right away. They continue to climb even on a tightening cycle, until the Fed actually starts to flatten out and cut rates. Then you get sell-offs into the market. So this kind of tells me that, Bitcoin could be finding a low here, continue to push higher, catch to the S&P 500. S&P 500 can move to new highs. If the Fed raises rates for the next, let's say, 6 months, 1 year, if they can, right, that's a different discussion, regarding how much they're going to hurt the economy and the growth overall. I know they're worried about inflation, so they kind of have to start moving, in this tightening cycle, but it doesn't mean the stock market will sell off. With the exception if it's extremely weak and overvalued, then you might get some stuff like that. But from previous cycles of tightening, we should be continuing to move higher in the stock market, at least for another maybe year or two, which can coincide with Bitcoin moving higher towards 100,000, maybe 150 levels, before you hit that cycle top and you get into a larger bearish market, both in the equities and in the crypto land. So, very, very interesting levels. I just wanted to kind of touch on that, just to kind of, explain a little bit what's going on in that kind of macro structure. We talk about this stuff every single day with my members, on the daily videos, and I'm bringing, different information regarding what's happening to gold and oil and, the interest rates. In here, for example, you see how the markets are extremely correlated, where the 10-year moves towards 140. Copper is moving lower a little bit along with Bitcoin, while the S&P 500 kind of holds steady. So we're be watching from a turn higher from these levels and kind of catch up with the equities. Remains to be seen, but that's something that I kind of wanted to touch on. Guys, we're at the middle here, or maybe 3/4 into the video. Please, come and give us a try. Take a 1-month subscription, see kind of how you feel, if you like it, if you think it's valuable, you might stay longer. If not, you consider us useless, you'll just leave. I don't think there's nothing to lose there. But go ahead and kind of give us a try. This is what we're doing in the pro room, the pro channel, charts channel, alerts, stocks, a very active chat room, a learning channel, an Elliott Wave course that you can take part of the subscription. We're doing weekly live streams every single Thursday, daily video updates. So it's a pretty awesome place, so I invite you over to kind of take a look. So, let's jump over and take a look at Ethereum. Ethereum, remains in this kind of growth channel. It's been slowing down as well, but longer term, I still looks very constructive. Some altcoins have been selling off. I don't usually present altcoins to YouTube. We talk about them in the program, but, like you can see ADA, for example, came back and almost retested that support level. So some altcoins that have gotten really, really frothy, have started to pull back and actually, had quite a big bearish trend. Some of them are still holding their levels. So there's a mixed picture in the alt world. The Ethereum continues to kind of climb higher versus the Bitcoin. Its network, it's a little bit younger. It should, continue to follow with the growth of the addresses and all, the Bitcoin network. So, that's why I tend to kind of look at this as a second wave. If this is complete, you have a 1, 2, 1, 2, and then you're about to rip higher. Maybe the second wave is not just over. There could be a triangle in here of some sort, but longer term, we continue to look to the upside. So this is kind of one of my main counts. This is the triangle count I talked about that connects with the price of Bitcoin as well, where you're moving into the consolidation phase. Although, Ethereum Bitcoin cross continues to climb at pretty much at a steady rate. You can notice a slight, bullish flag in here, I would say. So, there's a chance that Ethereum could push higher in here. But if it wants to consolidate, that's a very important level, this A-wave low. That's the top from back in 2018, 2017 at 1400, which is far below. So the next scenario would be more of a sideways move in here. And then, one of the things that I showed a couple of weeks ago is this move in here in a 1-2-1-2 rather than 1-2-1-2 at the lower degree. I'm looking for this as being some kind of a leading diagonal in a wave 1. I'm starting to get, this fourth wave is pretty much equal with the second. I don't want it to get too big. So let's look at this as a 1, 2, and then see if we can do a 3, 4, and 5 for the fifth wave. Complete this wave 1 primary, followed by a setback in a wave 2, retest the fourth wave low, and then push higher in the next move. So that's something that I'm definitely keeping an eye on in terms of kind of the shorter term structure in here. And then this is part of the primary count in a 1, 2, 1 to A, B, C. These two waves here are kind of equal. A, B, sharp drop in C. I kind of redrew this channel. We're being supported. It's a pretty important level with climb. We're kind of fighting this, and in terms of the moving average as well, we're a little bit better looking than in Bitcoin. But I think if this market wants to start climbing, it needs to kind of start doing it after, let's say, this kind of 618 to 786 pullback, following this rise in price. So that's a pretty nice impulse followed by a corrective setback. And let's see if we can continue to climb. And then, here is the Ethereum Bitcoin cross, longer time frames in 2015, at least since mid 2019 in here, you're starting to kind of take charge Ethereum versus Bitcoin. Counting this is a little tricky. I don't really like to count this Ethereum Bitcoin crosses. I think, they're not really suited for wave counts, although Ethereum Bitcoin might be an exception because there's a lot of things happening there. So you can look at this, let's say, as an expanding diagonal, 1, 2, 3, 4, and 5, followed by a second wave pullback. So 1, 2, 1, 2, 3, 4, and 5 for a larger third, maybe followed by another sideways moving fourth and a push higher. The next levels to be attacked are this 12, 30, and then 15, 23, and I think we're probably going to get them towards the top of this channel. We've broken out of this box. We've talked about this a couple of weeks ago as well. We came back, retested the broken line, and we're starting to trend higher once again. So this remains constructive, at least for Ethereum and for some of the alts. We'll see kind of what happens to the rest of the field in here, and probably more regulation will start to come in next year. So, here is kind of another kind of shorter term look, at this channel, kind of what happens in this box, how we've kind of went higher, broke above it, retested it, and see if we can kind of climb higher towards that, 11 point to 13 or so, this fifth wave, if it just started, it's still kind of fairly short. If there is like let's say an A, B, C, D, and a small E wave in there, then that's a 1, 2, and then you're looking 3, 4, and 5. So you still have a little bit more room to go to the upside. So guys, we're at the end. Thank you so much for watching. Please visit us on Twitter at Elliott Wave Cafe. Elliott Cafe, it's the it's the name over there. Find me on Telegram on the premium room. There's a public chat. There's an open forum in there as well for any questions, any charts. Go ahead and post them in there. Any questions? I'm usually pretty good at answering. And go ahead and share the good word. Share some of the videos that we have on YouTube. There's a lot of information there. And I'll be talking to you in a couple of weeks, if not any sooner. I still have a bunch of ideas about future videos in my head. I haven't really had time to kind of put it all together. Very busy in the room, very busy trading during the day. We're doing a lot of trade on the stock side, options, futures, all kind of things. And I'm not promoting my channel a lot because I'm busy trading. But go ahead and hit the thumbs up button, spread a good word, leave some comments, let me know what you think, and I'll see you guys a bit later. Bye bye.